Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the charts behind me. So the first one that I have up here is the UVIX, ticker symbol UVIX, which is the 2x long VIX futures ETF, tracks the VIX or the volatility index. And so I like to trade this one because I feel like the moves to the upside are pretty nice, but also you can trade shares of this ETF rather than have to do options or contracts that do expire, which is what happens with the VIX. And so the reason why I wanted to go over the UVIX, I have been covering it a little more recently. And the reason why is because there is this reverse split coming up, or actually that was in the past, happened yesterday on the 15th. It was a 1 for 10. And so I had previously drawn these green and red boxes, just kind of highlighting how there's, a big move to the upside followed by a big red pullback. But then that led to, nice opportunity to buy the dip, upside move, again, upside move, and so on. And so these boxes are really just, kind of arbitrary, just based on what I view as the low or what was the low during this range, and then going up to the high following that, and they've all resulted in some pretty nice gains. And so I don't necessarily think this is the best thing to be trading a lot. But I do think it is good to be building small positions in it so that whenever we do see corrections in the market, which is going to affect all of the stocks that we hold, this is a very nice way to hedge against that. Because what I have done, I believe on, this move up here, the more recent green box that we didn't just get out of, but this one here, I was able to take some profits on that. And, that was on a day, basically these 2 days here, when the market was red. So I was able to roll any of the money that I had in the UVIX into the other place. So effectively, it's like keeping cash on the side. But when you want to have that cash, it's actually going up in value. And then that can be rolled into the other stocks. So I just find this to be a really nice one to be trading. And there is one level that I didn't include in this. I just tried to transfer all of them, but the trend lines were a little bit difficult to transfer over. So I'm just going to do this kind of approximate here. And you can see how I am drawing this. Let's see, really just based on, being the low from over here, that was the end of August, and then just kind of finding some support here. This would be towards the end of September. And then over here, of course, we did break through that. And so that was a level that kind of made me think, oh, well, maybe there's like this regime shift or something with the volatility index, and that we might be seeing something new. And we did start to make new lows. Ooh, and maybe I want to extend this over even a little bit more to connect to there. So yeah, I think that's just a really nice, very simple trend line. Do see how that was support over here, gapped below it, and then moved up to test that. So yeah, technical analysis does work pretty well with the UVIX, just to kind of complement these, red and green cycles, which are approximately 2 weeks each. Of course, they can be a little bit shorter, as you see here, just about 4 days. But I feel like they've been a little bit wonky just because we've had a lot of 4-day weeks recently. This is the first 5-day week that we've seen in about a month. So I do think that basically we'll be starting to form a bottom, possibly the middle or beginning of next week, but I would say by the end of next week. And so that effectively means that the stock market will be going higher. And as this pulls back, the stock market's going higher. And then we'd probably see a correction, whether that means that the stock market's going to new all-time highs, or if we're just going to be making lower highs as we kind of trade lower. I just think that this is a really nice way to be taking advantage of any corrections, whether they're slight or major. And with that being said, I have over here, I was picking up shares of this ETF around, around $3, which would translate to around $30 now. And that worked out pretty well to me. I trimmed at about 10%. Could have made more money on it, but I wasn't so sure it was going to get up to that yellow line. Should have had more conviction in that analysis. And so basically what my thesis is for now is, I am very slow, very passive with building positions. And if this does dip to around 29.90, which would pre-split be $2.99, I would start to add. But because we have kind of been testing, forming a bottom here with these boxes, I do think that we could be breaking below these levels. So I'm just going to put a little horizontal line there just to keep an eye on that, because that does look like it's right exactly at 30. Maybe I'll make this line orange, and I'm actually just going to make this one up here a little less thick. So yeah, I think that we could be breaking below 30. Don't know exactly where we would be going. And let's see, a way that I can kind of get an idea of that is by doing a Fibonacci extension. So going up from the top here to the bottom here, and then the top. And then if we take a step back, that 100% retracement would suggest coming down to 17. So I don't really think that's going to happen. I don't think that's necessarily a good level. So yeah, let's just see if it holds 30. If it does, there could be a nice bounce, potentially up to this blue line right around $40 a share. I doubt that it would be getting back to 55. And so the reason why I kind of doubt that it will be making these highs is because, we just had a reverse split. And the reason for that is I believe because of contango, the value of these ETFs do diminish over time. And so they had to do a reverse split because they expect it to go lower. So I do think that it will, let's see, tend to make lower highs and also lower lows. And I'm just thinking, maybe I want to do a parallel channel real quick, and then I'll move on to some other charts that stand out to me. But I'm just going to draw a parallel from the high that was hit here on September 5th, and then connect that to the high that was more recently hit. That was on, let's see, what date was that? Looks like December 19th. Connect that to the high there. Does look like we have a nice little level of resistance there, and then connect it to the lows over here, which, maybe I want to go to the lows. Yeah, I think I might, it's kind of arbitrary, but just doing it from the lows of December 4th. And so we do see that channel there. I'm actually going to make this a little bit thicker in a light blue. I just find that to be a very soothing color to look at. And yeah, we did break below that downtrending support over here on, let's see, August 19th. But we did, even previous to touching it there, we did touch it back here, leading up to the big move in on August 5th. So we tested that level in the middle of July. And then more recently, we have tested again. So rather than doing the Fibonacci extension, that would suggest 17 as a level of support. I could see it actually coming down to, let's say, if I just draw the line down here, this intersection, I might just do it kind of arbitrary there. $25.50. I was going to suggest $25, just being, not a round number, but a whole dollar number. So I think that is where it could be going. And I might actually make that a purple line, just because I like the way that purple stands out. So yeah, let's see how 30 holds. If it doesn't hold, I feel like 25 is on the table. And then that could be a really nice way for hedging when markets do make a correction. And so with that being said, I will switch over to the S&P 500 to look at that real quick and then get into some stocks. But just like the thumbnail suggests, you see Ed with a cup of coffee. I got my cup of coffee here, really, just trying to get into better habits, getting ready for the day rather than rolling out of bed for the market to open. We get to, roll out to see the charts here. And so one thing, I am looking at the daily charts. I should note I could be looking at the pre-market data. I just don't think the pre-market data is necessarily that important. But with the UVIX, if I do switch over to the 10-minute chart, we can see that, it's perhaps bouncing around, that $30 level. We did hit a low during market hours yesterday of $30.09. As we can see up here, the low was $30.09. We might be breaking below that today. This could be a bear flag, just like we saw a down move here, consolidation, continuation lower. We might see that again, and that might actually be a nice way to get an idea of where it could be going. If I do a Fibonacci on a Fibonacci extension on the 10-minute time scale, don't know exactly how high it's going to go, but with that drawn there, if I do take a step back to look at the let's see, daily time frame, we can see that level is around 2868, and that is basically the measurement from the top to the bottom here. Translate that to whatever the high is, that could be coming down to 2868.